$63,000. That's the price tag they just slapped on your right to make money from silver. They raised it 20 hours ago while you were asleep. And if you don't understand what just happened, you're about to become exit liquidity for the same banks that have spent years telling you precious metals are a relic of the past. Stop. This is not a drill. This is financial warfare, and you are the target. It's Wednesday, January 28th, 2026. Your screen says silver is trading at $114 an ounce. That's the COMEX price, the official price, the price they want you to see. Now let me tell you the real price. In Shanghai, $125. In Dubai, $130. In Tokyo, $140. $26 difference between what your screen says and what silver actually costs. That's not a market. That's a confession. My name is Carter. I've been doing this for 12 years, and today I have to tell you something that's kept me up at night. I'm not a financial advisor. I'm a guy who works in finance and is sick and tired of watching the system crush the little guy while protecting the same banks that caused the 2008 crisis. There's a number that changes everything, a number that explains why they're so desperate. We'll get to it. When you hear it, everything will click into place like some kind of twisted puzzle. Let's talk about the kill switch. Think about this. The CME Group, the private company that controls the metals futures market, just raised silver margins to 11%. Sounds technical, sounds boring. Let me translate. One silver contract on COMEX is 5,000 ounces. At $114 an ounce, that contract is worth $570,000. The 11% margin means you need $63,000 in cash just to keep that contract open, not to buy the silver, just to keep your bet alive. Do the math with me. A month ago, that margin was $20,000. Then $25,000, then $32,500, now $63,000. They tripled the cost of entry in 30 days. Tripled. You know what that is? It's like you're at a casino, you're winning at roulette, and the owner walks up and says, "Hey, starting now, the minimum bet is 10 grand. Don't have 10 grand? Then get out. Thanks for playing. Good luck. Oh, and those chips you won? I'm keeping those to cover administrative costs." Game over. And here's where it gets truly twisted. Since January 13th, the CME no longer uses fixed amounts for margins. Now they use percentages, 11% of the contract value. Know what that means? Every time silver goes up, the margin goes up automatically. The more you win, the more it costs to hold your position. It's like a gym that charges you more the stronger you get. Hey, I see you've put on some muscle, so now your membership is $500 a month. And if you lose weight, we'll give you a refund. Just kidding, no refunds. Carter's been explaining this for years. The people who run the casino can change the rules whenever they want, and they always change them when you're winning. Never when they're winning. Funny how that works, right? This has happened before. 1980, the Hunt brothers, two Texans with more money than sense, accumulated silver. They kept buying until they controlled a significant chunk of the market. Silver went from $6 to $50. What did COMEX do? Change the rules overnight. Ban new purchases. You could only sell. The Hunts got liquidated, lost everything. 2011. Silver nearly hit $50 again. What did the CME do? Raised margins 5 times in 2 weeks. 5 times. The rally died. 2026. Silver breaks $114. What does the CME do? Raises margins 4 times in 1 month. See the pattern? 46 years. Every time the little guy is about to win, they change the rules. Every single time. No exceptions. But Carter, is this legal? Of course it's legal. They write the rules. According to CME Rule 802, the board has the absolute right to change margins at any time without prior notice. It's legal because they decided it was legal. It's like playing Monopoly with a 5-year-old who, every time you're about to win, says, "New rule, now houses cost double." Except this kid controls your retirement and has an army of lawyers. So who's behind the CME? Good question. CME Group isn't a government agency. It's a private company traded on NASDAQ. Its clearing members are JP Morgan, Goldman Sachs, Bank of America, the same banks that are short silver, the same ones who benefit when the price drops, the same ones who paid $920 million in 2020 for manipulating precious metals, the biggest fine in history, $920 million. and they're still operating like nothing happened. Because for them, that fine is the cost of doing business. It's like when you pay a parking ticket. It annoys you, but you don't stop parking illegally, especially if parking illegally makes you $10 billion a year. Let that sink in. The people who control the market are the same ones holding short positions. The people who set the margins are the same ones who profit when prices fall. The people who write the rules are the same ones who win when you lose. And people still ask me why I don't trust the system. I don't know, must be my imagination. Now let me tell you what happened in India 3 weeks ago. Because this is your preview. This is what's coming if you play the paper game against the people who control the rules. Pay attention. Rajkot, city in Gujarat, Western India. One of the largest silver trading hubs in the world. We're not talking about amateurs staring at charts on their phones. We're talking about families who've been in this business for generations, professionals with decades of experience. 3 weeks ago, 44 trading firms declared insolvency. 44. In 1 week, $425 million in losses. What happened? They were short. They'd bet that silver wouldn't break a certain level. Reasonable bet based on years of experience. But silver kept climbing. And when the CME raised margins, they couldn't cover. They got liquidated. Not in days, in hours. Decades of business. Generations of knowledge. Gone before lunch. In India, they call it Valan, the settlement difference. When the market moves against you and you can't pay, the Valan destroys you. Think about this. These 44 firms weren't in Chicago. They were in India. But the CME's rules reached them anyway. Because the CME is the global standard. When Chicago raises margins, Rajkot trembles, Dubai trembles, your European broker trembles. Think this can't happen to you because you trade from Europe? Your broker uses COMEX prices. Your broker adjusts margins when the CME adjusts margins. You're in the same casino even if you don't know it. That investment fund you have at the bank, that commodities ETF, know what's inside? Paper, promises. And when the promises break, you're the last to find out and the first to pay. Remember that number I promised you? The one that changes everything. Here it comes. 356 to 1. That's the paper to physical ratio in the silver market. For every ounce of physical silver that exists in the vaults, there are 356 ounces of paper claiming to represent silver. Futures, options, ETFs, derivatives, 356 promises for every real ounce. Imagine a restaurant that sells 356 reservations for the same table. At 8 p.m., 356 customers show up. They all have confirmed reservations. They all paid in advance. But there's only one table. 355 are going to eat air. They're going to show up, sit on the floor, and the waiter will say, "Sorry, no food, but here's the cash equivalent." Minus fees, of course. And minus the volatility adjustment. And minus the early liquidation charge. That's the silver market right now. 356 people think they own an ounce of silver. Only one actually does. The other 355 have a promise. A promise from the same banks fined $920 million for manipulation. I don't know about you, but I wouldn't trust that promise to hold my place in line at the grocery store. The Great Divorce. This is what really worries me. I told you silver trades at 114 on COMEX and 125 in Shanghai, but you need to understand what that means, because it's not just a price difference, it's the breakdown of a system that's worked for decades. Throughout the modern era, the West set the price of silver, London and New York, paper markets, and that price got exported to the world. If you wanted to buy silver in Tokyo, you'd check London and pay that plus a small premium. That doesn't work anymore. Today, Shanghai pays 125, Dubai pays 130, Tokyo pays 140, COMEX says 114, $26 gap. Why would anyone pay 140 for something the screen says is worth 114? Because they don't trust the paper, because they want real metal, because they've figured out that the COMEX price is a fiction held up by derivatives and empty promises. And when you try to convert those promises into physical metal, you discover there isn't enough for everyone. Someone put it perfectly. Silver at 140 in Tokyo and 114 on COMEX isn't a market. It's a confession. Surprise. Silver lease rates have exploded to 8%. Translation. The cost of renting physical silver. Normally it's between 0.3 and 0.5%. 8% means someone is so desperate to get their hands on silver, they're paying 8% annually just to borrow it. It's like seeing someone pay $1,000 for a bottle of water in the middle of Manhattan. Either there's a zombie apocalypse I missed, or that guy knows something I don't. The market is also in backwardation. Today's price is higher than tomorrow's price. Normally, it's the other way around. When this happens, the market is screaming, I want silver now, not tomorrow, right now. I don't care about the price. All the signals point to the same thing: physical shortage, distrust in paper, the divorce between Wall Street and the real world. And the people running the casino are desperately raising margins. Why? Because if too many people demand their metal at once, they'll discover the emperor has no clothes. They'll discover there are 356 promises for every real ounce. Now the context. Because all of this is happening while the world is on fire politically. And it's not a coincidence. 2 hours ago, the Federal Reserve announced it's holding interest rates steady. But the decision wasn't unanimous. 2 governors voted against it. Stephen Mirren and Christopher Waller. They wanted to cut. And who appointed them? Donald Trump. Trump has been pressuring the Fed to lower rates for months. He's called Powell incompetent, disastrous, and things I can't say without getting demonetized. And now his own appointees are voting against Powell, inside the Fed, in public. It's like watching a civil war unfold in real time. But that's not the big one. Here's the big one. The Department of Justice has opened a criminal investigation into Jerome Powell. Read that again. Criminal. The chairman of the Federal Reserve of the United States is under criminal investigation while serving in office. Officially, it's about the Fed building renovation. $2.5 billion in upgrades. But Powell has said publicly, on video, that this is a pretext to pressure him on monetary policy. It's the first time in 112 years of Fed history that they've criminally investigated its chairman. 112 years. World wars, depressions, financial crises, pandemics. They never did this. Until now. Know what that means? It means the President of the United States is willing to use the Department of Justice as a weapon against the central bank. It means the Fed's independence, which is the only thing holding up the dollar's credibility, is under direct attack. And the market knows it. That's why it's buying gold. What did Trump say yesterday about the dollar? They asked him if he was worried it was at 4-year lows. His answer, word for word, no, I think it's great. Great. The president of the world's leading superpower says his currency tanking is great. It's like the captain of the Titanic saying, that iceberg looks wonderful, really adds a refreshing touch to the voyage. The euro is at 120, highest since 2021. The pound at 138. The dollar has lost almost 10% in a year. And the president says it's great. Do the math. If you have savings in dollars, they just lost 10% of their purchasing power in a year. Not from inflation, from deliberate devaluation. Because the president thinks it's great. What happens when the leader of the free world says he wants a weak currency? Smart money runs. Where to? Assets you can't print. Gold, silver. Gold broke $5,300 today, all-time high, up 22% in 28 days. And this isn't Carter, the YouTube conspiracy guy, saying this. Goldman Sachs is raising their price target to $5,400. Deutsche Bank predicts $6,000. Bank of America puts silver at $170. The same ones who last year said silver would average $32, they were off by 400%. But hey, 8-figure bonuses every December anyway. Nice work if you can get it. I'd love to be that wrong and still get paid. China. The elephant in the room that nobody wants to mention, but that's crushing all the furniture. Since January 1st, less than a month ago, China has activated silver export restrictions. Licensing system. Only 44 government-approved companies can export. To qualify, you need to produce at least 80 tons per year. Translation. 60 to 70% of the world's refined silver supply is now controlled by Beijing. They haven't banned exports. They did something smarter. They put their hand on the tap. They can open it or close it whenever they want. Elon Musk tweeted, "This is not good. Silver is needed in many industrial processes." And he's right. Solar panels, electric cars, semiconductors, everything that makes the modern economy run needs silver. And know what's happening right now? Chinese and Indian buyers calling Canadian miners directly, offering $8 to $10 above market price. They don't want contracts. They don't want promises. They want metal. And they'll pay whatever it takes. It's like when PlayStations are sold out at Christmas and people pay double on eBay. Except these aren't gaming consoles. It's the metal that underpins the global energy transition. And China just turned off the tap. The silver price is no longer set in London or New York. It's set in Shanghai. And the West still hasn't caught on. They're too busy staring at the COMEX ticker, which at this point is about as useful as a broken clock. Inventories tell the story better than any analyst. First 2 weeks of January, 33 million ounces physically withdrawn from COMEX vaults, 26% of registered inventory. In 7 days, on January 7th, JP Morgan issued 99% of the delivery notices, 8 million ounces in a single day. JP Morgan, the same bank from the $920 million fine. Why are they delivering physical silver at that frantic pace? Because they're covering short positions. Because they know what's coming in March, which is a primary delivery month. Because they're scared. And there's something even stranger. Normally, traders roll contracts forward. Close January, open March. But now they're doing the opposite, rolling backward, from March to January and February. They want the metal sooner, not later. That only happens when you don't trust the metal will be available down the road. It's like when there are shortage rumors and people start hoarding toilet paper, except this is silver. And the ones hoarding are financial institutions with inside information. Since 2020, COMEX registered inventory has dropped more than 70%, from 346 million ounces to less than 100 million. The vaults are draining, demand is accelerating, and they're raising margins to stop the stampede. Yesterday, the doomsday clock moved to 85 seconds to midnight. Stop. You need to understand what that means. The doomsday clock was created in 1947 by the same scientists who developed the atomic bomb. It's their way of measuring how close we are to destroying ourselves as a civilization. Midnight is the end. 85 seconds. It's the closest point in 79 years of history. Closer than during the Cuban Missile Crisis, closer than during the Cold War, closer than ever. The scientists cited nuclear weapons, climate change, artificial intelligence, but they also specifically mentioned tensions over Greenland, Venezuela, the attacks on Fed independence, and the weaponization of global trade. When the scientists who study existential risk say we're closer to disaster than ever, smart money doesn't buy tech stocks. It buys things you can touch, things that exist even if the computer's shut down. Gold, silver, land. This isn't decoration. It's the backdrop to everything I'm telling you. The world is fragmenting. Alliances are breaking. Trade is becoming a weapon. And in that context, precious metals aren't a speculative investment. They're survival insurance. I'm going to be honest with you. Can silver drop from here? Yes. In 1980, after hitting $50, it fell 90%. It took 40 years to recover. Margin hikes have worked before. The manipulation can continue. Carter could be completely wrong. Wouldn't be the first time and won't be the last. But there are differences from the past I can't ignore. In 1980, demand was speculative. Today, more than 60% is industrial. Solar panels, electric cars, semiconductors. Samsung is developing solid-state batteries that need a kilo of silver per 100 kilowatt hours. That demand doesn't disappear because the price goes up. Factories need silver. There's no substitute. The market has been in deficit for 5 consecutive years. Every year we consume more than we mine. Cumulative deficit since 2019, more than 1.3 billion ounces. And unlike gold, silver gets consumed. It goes into solar panels that will sit on rooftops for 30 years. It goes into cars, into phones. It doesn't come back. It disappears. That wasn't happening in 1980. What is Carter doing? I'm not going to tell you what to do. I'm not your advisor, and this isn't financial advice, but I'll tell you what I'm doing. I'm not selling physical silver, not a single gram. I've been stacking for years, and I'm not selling now that the system is cracking. I don't play futures. I don't put myself in a position where the CME can liquidate me while I sleep. That's playing poker against the casino when the casino deals the cards, counts the chips, and changes the rules whenever it wants. Thanks, but I'll pass. I buy on hard corrections. With money I can afford to lose. With money that can sit in a safe for years if it has to. Physical has no margin calls. Physical doesn't get liquidated at 3 in the morning. Physical is yours, period. I have a family too. I have savings too. I'm not telling you this to scare you. I'm telling you this so you can protect what's yours. Let's recap. 2 hours ago, the Fed held rates while Trump's guys voted against it. Powell under criminal investigation for the first time in 112 years. 20 hours ago, the CME tripled the cost of betting on silver. Yesterday, Trump said a weak dollar is great. Yesterday, the doomsday clock hit 85 seconds. China controls 70% of supply. Inventories have dropped 70% since 2020. 44 firms in India went bust in 1 week. $26 difference between your screen and the real price. All connected, all in January 2026. Resets don't send warning letters. They don't call to tell you change is coming. They just arrive. And when they arrive, there are 2 kinds of people. Those who were prepared and those who wish they had been. Save this video. Come back in 6 months. Let's see how it ages together. If this opened your eyes, share it with one person. Just one. Someone with savings who doesn't know what's happening. Someone who deserves to know the truth. Remember those numbers. 140 in Tokyo, 125 in Shanghai, 130 in Dubai, and 114 on your screen. That difference is the truth. They can't hide anymore. They've called us crazy for years. Welcome to reality. This is Carter Finance. See you in the next one.